Hello there, and welcome to the value of everything. We're going to look into a Bitcoin bank. To firstly do that, we need to work out what Bitcoin is like and what Bitcoin really cannot do, the means in which capital could be raised, the way that loans could be honored, and how does it all get structured in a decentralized framework? All very complicated. I wonder if many people have already devised an idea. I know that there has been a few ideas in which we use the current banking system in like Ethereum, I believe, to trade contracts within a blockchain ledger, which purely just gives a secure network and a cheaper way of transferring money and accounting. But I'm really interested in the terms of using a decentralized blockchain banking system more than anything else. Bitcoin has some issues in terms of its ability to be involved in banking. However, it has some incredible advantages as well. So Bitcoin is like gold. It has a limited supply and it is harder to extract as time goes on, so therefore it does hold its value. With gold, we have a perceived attractiveness, so people like to wear it as jewelry, people like to flaunt it and show their gold teeth, or it's just got a nice little glisten in the sunlight. It's one of those things in which people see intrinsic value for. But also Bitcoin, on the other hand, which is slightly different to gold, has a bit more security in terms of mobility. You can pass borders with memorizing a code in your head. So there is the mobility and the encryption element, which does still store your value. And really, it's even more secure than gold because essentially, if you had a corrupt mob that was trying to go after your gold, they could quite easily extract it from you. However, if you can memorize the code in your head, and as long as that mob has like maybe got truth serum or something like that, it's going to be very, very hard for them to extract that information from you, and you potentially could have hidden it in some location. So it's got heightened security levels with Bitcoin in comparison to gold. Obviously, there is a few issues in terms of how you use Bitcoin, but if you are very savvy and you have cold storage, then you are pretty much going to be as secure as, even more so secure than what I would say gold would be. So there is the intrinsic value there. If you consider, this is the main point between gold and Bitcoin, is that it really does increase value as the method of production improves. But also, it does increase in value as fiat money supply increases. So they're just the two most important things. But you can see how Bitcoin in a future society is potentially going to be perceived as a gold. Now, what Bitcoin cannot do is it really cannot be loaned out, because we do have a situation where there will only be a limited supply of 21 million Bitcoins. Essentially, when you loan out money, you are taking on risk, and for that risk, you require some kind of interest repayment. And really, there isn't enough Bitcoins in circulation for you to receive any interest back in return. So therefore, you will eventually get write-offs of debts, people who are not able to pay their debts because there isn't enough Bitcoins in circulation, and a load of consolidation collapses in the economy. So Bitcoin isn't really a structure as to which you could really have capitalism, because you cannot really obtain the capital to increase the living standards as much. Maybe a tiny bit from just a small little growth, but if you really want to if you came up with a great idea and you needed to build a very big scaled up factory, it's just not going to happen with using Bitcoin as your resource. So we have a problem here with Bitcoin. It's not necessarily the answer to all of our prayers. However, we still have the blockchain technology, which is really more the main thing that's underpinning Bitcoin itself. So we just need to delve into that a little bit. The idea that I'm just thinking on the top of my head in thought experiments and a few notes, is that you would have a trust coin blockchain ledger. Now, when I mentioned the trust coin, this is just a new minted coin, slightly like Bitcoin, but it's a bit different in terms of the way it's being created. But it is very much pegged to the Bitcoin. So, firstly, you need to create a predetermined framework of decentralized banking. So this is like the blockchain source code. You'd need to set the accounting ledger, which would be obviously open to everybody, so everybody could see all the transactions, the loans which were loaned out, anybody that was dishonoring their loans. You would just purely have a full there's a beautiful word for this, but there's a way in which you could see everything that's happening and any failures and any good signs which were occurring within this ledger. Basically, if somebody was doing a very dodgy version of a lending coin, then you would be able to see very quickly that the loans weren't coming in, and you would be able to take your money out of that trust coin network. The next thing would be is that obviously you would need to create a new credit or a new unit of measure, which would be this new coin. I've just mentioned before this trust coin. At the center of the core of this framework would be an exchange rate between trust coin. We're going to keep on using that word for the meantime. It's just a theoretical. It hasn't been created yet. And Bitcoin. Now, this exchange rate between the trust coin and the Bitcoin is very important. I will come back to that later. The next part would be a mandate for mining. Now, the miners are slightly different here. Basically, if you could consider that these are loan brokers, but these loan brokers are putting their money into the ring as well. So they're putting their collateral into the ring, and they are looking out for applicants for loans. They're looking for trustworthy loan applicants. Then they will be able to provide them with trust coins based upon the balance of Bitcoins that they have in their account. Then these trust coins can be lent out. Then they manage their, there's another beautiful word as well, their portfolio of customers to ensure that all the loans come in. They do all of the due diligence and checking that person is really just trying to do something that is going to increase living standards. It's either going to increase humans to have more time to do other things, which will increase living standards, or it will produce more things with less energy and less matter. So if those are the main things, it's not purely a loan which is created to speculate upon, then we will have a very good structure in which the system is loaning out money. Also, with this mandate for the miner, you may require some kind of sliding scale in accordance to the quality of the miner. So if a miner comes up at first, you may require a large amount of collateral or a large amount of Bitcoins for them to open an account. And then you may require that to be lessened as time progresses, and it's noted that all of the loans are coming in quite regularly. You may, there's different measures in which you can do this. Also, you may need to have counter miners. So this is a secondary mining system, which basically works as a credit rating system on the backbone of this, and basically they may be distributed trust coins as well for the benefit of assessing the rating of loans. So you could have a scenario where a miner comes along and he loans out a load of trust coins, but basically they're not very trustworthy. The miners are looking at this and then they say, okay, it's probably best that we give them, we ask for this miner for more collateral, or he will potentially collapse. And if it is proven to be true, then that miner gets rewarded more. If that miner has predicted the collapse of that miner as incorrect, then that miner gets less of the share. So there is this rating agency which is going around, and they are miners themselves. They would have to work independently. Maybe you still need a miner that watches the miner. So they're watching the rating agency miner. You may need something on top of that, but it will be interesting. I'm not saying that there should only be one of these Bitcoin banking systems. I would say that you should be able to make a multitude of these banking systems and let them all compete with each other and see what one becomes the most trustworthy and the most beneficial to society. So we're going to go into the initial part of transactions because it's probably a little bit theoretical at the moment still. So I need to just go into maybe the first day of trading in which loans are issued. So the miner firstly goes, I like this idea of this trust coin network. I would fancy opening an account. So the miner goes down to open an account. There is a set of miners which already start to look at that miner's quality, seeing how well he has or she has performed, and gives them a certain rating. That rating equates to how much collateral or deposit that they have to put down to open up their account. So it would be something in the region of, let's say, for example, that miner puts down 30 Bitcoins. Now, in return, they get 100 trust coins. So there is a incredible inflatory in supply of trust coins in comparison to Bitcoins. This is a very important part. Now, these trust coins can be loaned out. It could be loaned out to just one applicant. It could be loaned out to a multitude of micro loans. It all depends on how that miner would like to mitigate or diversify their risk. We just need to look at now speculation and value. So what we're going to have to assume here is that somebody receives a loan of 100 trust coins. Now, I would imagine if it's the very first early days that that person would say, I'm not sure about these trust coins. I think I'll exchange them back directly into Bitcoins again. So, for example, they had 100 trust coins. They'll probably exchange them for, say, 29 Bitcoins. Now, in this example, we do have this scenario where the trust coin network is becoming cheaper. But there is a very interesting aspect here. As the loans perform well and the loans come in, then you will have this strange effect where speculation will drive and people would like to have more trust coins in comparison to Bitcoins. Now, this is the even slightly more important part here as well, is that once time progresses, Bitcoin will always be worth more in the future. So therefore, as you go down to the shops and the methods of producing a pint of milk becomes better and better, you should, in theory, or the quality becomes better, you should, in theory, be able to buy more with your money. So rather than a pint of milk costing a fraction, say 1 Bitcoin, it's quite expensive right now. Over time, it would cost you only 0.80 for a pint of milk. So you would see that you've basically got, just by holding Bitcoins, it's going to increase in value and they're going to be worth more. Now, this is a fantastic element, but this is all happening by the scalability, the improvements of living standards, by the capitalism that's being created by the trust coin itself. All right, let's explore the inflationary aspects of trust coin and how it interacts with Bitcoin itself. So I mentioned before that we had, say, in the miner's perspective, this 100 trust coins. The miner's account has placed 30 in there. And basically when this loan is issued, the miner requires, say after a year's time, 105 trust coins to be paid back. So the question is, where do you get those 5 trust coins from? So let's just look into some facts and figures. Let's say that of the 100% of loans which are issued, only say 99% of them are fully honoured. So let's say 1% of them completely defaulted, never get paid. And let's say that the loans are charged at 5%, just a flat rate at the end of the term. And therefore, we just get that 5% interest. So when you do a little calculation based upon this, when you have the 5% interest and you have the 1% failure rate, you basically get 3.95% profit in this equation. So that's basically the money supply expansion from what's happened. This means that 3.95 is more in circulation that goes around the system. And basically that increase in the system is basically how much the economy has improved in terms of living standards, in terms of more time and more efficiency, which is being created. This is also very dependent on how the miners have been allocating the loans itself. So we need to start investigating some important questions on this basis. Why hold trust coins? It seems like these trust coins are just going to go downwards very rapidly in comparison to Bitcoins. Therefore, there's no real point of you ever owning a trust coin. Well, it's not quite exactly like that. So firstly, you do get loaned only in trust coins itself, so they are in circulation in the system regardless of whether that person wants the trust coins or rather the Bitcoins. Those trust coins do need to be loaned out initially, so they are received, and there is, in theory, for every trust coin that's in circulation, 30% of it is backed by a Bitcoin in collateral requirements, depending on how the blockchain source code system is designed. So there is a certain perceived value in that anyway. And then on the basis of this, you would have to think to yourself, once you start paying off the loan, you need to convert your Bitcoins and you transfer them back into the trust coin unit of measure to pay back your loan to the miner itself. So say if you were this person who required the loan, you got these trust coins, you instantly converted them back into Bitcoins, then you did your business, you bought your things, and then you had to go out to the market again to purchase trust coins. That might be more expensive for you. So in theory, you may have just been better off holding the trust coins from day one. Now, I guess when it's the initial start of Trustcoin, it will be a very different thing. But at the end of Trustcoin, it probably would be more of that case where people are seeing all these loans come in, the actual scalability and the improvements to factories are going so well that there wouldn't be this requirement to convert back into gold, which would be your Bitcoin. Okay, so we still need to explore a little bit further as to why own these trust coins itself. Now, number one as well would be that for a miner, it's fantastic. You can earn the money back in the interest returns and the credit expansion, which is happening on the basis of that, which is your profit margin in itself. You do have a potential to, if you do have trust coins, you could potentially provide them back to the network itself. It is very dependent here because you may be rehypothecating loan supply. But with those trust coins, you potentially could put the trust coins back into the network itself for them to be used again. It's an interesting aspect there, but you could earn some kind of interest back from the miners themselves. One of the good things about this loan and rehypothecation is that you could have a trust coin digitally signed to only be loaned once. So once that loan is out there, everybody knows that that money is essentially assigned to one thing or one loan instrument only, and it should never be reloaned out ever after that point. So there could be some kind of security measure in which that money or that exchange transfer should only be a transfer of funds and never a loaning of funds, where in which you'd need to have that money back at a future state with some kind of credit. So there is some interesting security measures that you can apply within the actual Trustcoin network for it not to start to create this massive shadow banking system on the side, which is very problematic, especially in China right now. Okay, so that's two little items there. So you could take some trust coins and then you could place it back onto the network, and that could feed you some passive income. You don't need to be an official miner itself. And then, so there's one reason why it's quite good. If you're a miner, obviously you are the broker of that credit expansion. So you are earning the money as the production gets better. You're earning off the back of that. And in theory, there is these different means and ways and supplies in which you are earning in the risk that is being done by taking on these loans. Okay, so let's look at a few variants here, because I think I've gone through all of the major technical points in terms of how the loan system could work. So it's all about risk and reward, obviously, and one trust coin could be very trustworthy and another trust coin could be massive loans which could be generated. But the problem with those massive loans that could be generated, it could be highly speculative and maybe not really for productive means. Other interesting aspects of it is that you could create these trust coin loans to be more artificial intelligence based or algorithmic. So the miners are not as human. You could have them more robotic, but that does have a lot more dependency factors here as well. And there is opportunities for massive volatility. Another model that you could potentially have on the books, which all banks do this right now, is you could use some kind of a hedging model. So for every loan, you could have a counteracting loan to another speculative money supply model with risk and balances. So you can really throw in some huge amounts of complexity to creating models of risk within the loan structure of a trust coin network. But I probably wouldn't be very keen on getting on board with something like that. I would rather something that you could tangibly see. These loans are going out right now. These loans are coming in right now. This loan system is worth this much. Probably you're better off to have your money in that rather than something else. You could have requirements for high collateral for miners, so that is really they've all got all their skin in the ring. You could have low collateral requirements, so that they could be more frantic and playing around with doing lots more loans, but that coin could be at high risk. You could... Yeah, as I mentioned before, there's an interesting element of speculation between trust coins. So you could have some kind of trading which could occur between the two trust coins, dependent on how you want to mitigate risk. However, I would say that there should be some kind of digital signature for the loan for it not to be rehypothecated. Yeah, this opportunity for active miners and passive miners. So when I said passive miners, when you own a trust coin, you potentially could own it, and you could, by the means of owning the trust coin itself, put it back into the network and have some kind of passive earning potential from it, which may take a little bit from the miner itself, but you may have something in return. So there is this counteracting balance of being the person who does the loans and being the person who puts in the deposits. And you could have a basis of pure Bitcoin deposits, and you could have a mixture of Bitcoins and trust coins itself. It's an interesting thing, but obviously over time you do not want to set up a complete house of cards like what we sort of have today. I guess one of the major points throughout all of this is transparency. You do really want to know whenever any of these open source code networks of banking systems are created, you really want to see exactly what's being presented inside the accounting ledger in a very nice way. So it's very understandable, and you know whether you should keep your money far away from it or whether it may be just a worthwhile venture if you could double click into the loans, and you understand exactly what the loan is for, and you get a lot of intel about it, and you can see that the estimated returns of production by this loan will create this % of increase of living standards or quality of the products and items like that, then we do have this really fantastic granular idea of how the money is working to capitalized ventures which are improving living standards. Yeah, so I guess just another couple of things which are coming into the mix here is that there is this beautiful thing where you are closing the gap between lender and loaner, and you're really cutting out all the middlemen, the people that are making massive margins and sitting back and enjoying just basically transaction fees for not really doing too much at all. Once you create an independent network of systems of people counteracting and transacting with each other, working out where the best capital can be applied to create the best production living standards, then you do have a engine room which is really improving life itself. Another few little mentions as well that boom and bust potentially still could exist. Speculation and the clouding of minds and sheepmen and herd mentality can create a lot of strange things. Potentially, especially if you have a trust coin network which is creating massive returns. It would be very risky if you're getting these humongous unsustainable returns, which really isn't connecting with what's happening in the day-to-day world. Just mention as well is that I've made certain suggestions on other coins and how it could interact with a independent blockchain banking system. I've mentioned before anti-monopoly coin, where you have incentive measures to stop collusion of the CEOs that make massive amounts of money and distribute it into a cooperative company where people at the ground level could earn as much as the people at the top. You could have innovation coin, which is preventing you own every single idea and it's not allowed to be replicated, but only just the innovation part, the tiny bit of you applying a change to, say, the script or the code, you should get a revenue return for that alone. That can really revolutionize. And when you apply that to capitalism, it's a different model in comparison to what we have today, where there are companies which have patents and lawyers who are trying to keep their own products to themselves, and you have a lot of duplications and competition and weirdness which is occurring. If there was any company can go out there, build something, take an idea from anywhere and apply it for themselves and not worry about lawyers, it's a different scenario for capitalism in itself. Also, the one thing to mention is that there is this element of crowdfunding as well. So if you could think of how there could be miners who actually have the money, and you potentially could get these miners working to create crowdfunding platforms so that they have more of a potential to find and extract good investment models to increase production. There is this fantastic feedback loop between people, masses, miners and trust coin owners and people that are earning interest. There's this fantastic feedback loop of how that the economy could improve, and it really needs to work on a decentralized level, not just one elite sitting in a room working out where people are going to move to next. There needs to be thousands and upon millions of people all with different interests and wants and needs, things to attain in art and creative ideas, and it all needs to be allocated in a very individualist speculative model, but a speculation which is to increase and improve life. I guess the one thing that obviously people might be just asking is, why don't we have this now? Why isn't this being created? And obviously the major point here is that there is regulators out there. And I guess it's kind of interesting. You potentially could find a way that this could exist if the miners and everybody else, it could be like a dark coin system where everything is totally anonymous and there is nobody to find out who is connected to each loan. But you do need a little bit of transparency to know where the money is going to, why it's a good investment. So it's this problem about regulation. The regulations in most countries will require that a bank needs to have a banking license. It needs to be set up. And so all of these individual miners to work on an individual platform network would require banking licenses and tons of regulations, tons of setup costs. So it's a very impractical model unless there could be some way of it which it could fly under the radar of government controls and government regulations. But the transparency thing is required there as well. So this is the main reason why I guess it hasn't massively come into fruition. But I would imagine, I guess things like Uber do exist, and that people thought that it would be impossible for it to exist with the regulations of the cab companies and everything else. So this has a potential to expand massively in a very short space of time. Once there is competing source codes of independent banking networks all fighting against each other, I would say the big Colossus banks are going to be really looking behind them and thinking, oh my God, this independent network's going to catch up with us very, very fast. Yeah, just some things to think about if you're thinking to create a independent, decentralized Bitcoin banking network. This potentially is a good few ideas to throw into the mix for you. If you've got any other ideas, suggestions, or areas where I've missed some very massive glaring spots which really trash the entire theory, please put them in the comments below. And as always, thank you very much for your time, and I will be back again for more.